right, good morning. Welcome, everyone. You know, how many times has a founder said that their startup is going to save the world? It's, in some ways, said so often that it's become a cliche, but sometimes it's actually true. A lot of founders are increasingly turning to climate when they're founding their companies, confronting the climate crisis head on. But are they good businesses? I think that's the big question. Now, Hyuk-Jeen, let's say a founder walks in the door. Does the question of can they save the world cause them to bite off more than they can chew?
I think for startup companies, they almost have to bite more than they can chew, because without that boldness and vision, I think it will be difficult to really make an impact. And for these startup companies, they're trying to create this unique technology, and by incorporating that into a partnership with companies, they're able to scale it so that biting off a little bit more than they can chew is resolved with that symbiotic relationship.
I mean, does it cause any problems? Like, what's the biggest mistake you've seen a founder in that position make?
I think in the beginning, a lot of founders get kind of focused so much on making their widget that one widget is all they care about, and they haven't figured out how to build the foundation for scale. So even though when you're making a widget, you have to think, how am I going to mass produce this? How am I going to mass market this? And they often run into that problem. I think from my experience, most of the founders who have challenges in the earlier stages is that part, is that scaling and thinking about the platform.
Yeah, so I mean, thinking about the platform, the scaling, like, what do you tell them specifically? How do they take that advice and kind of implement it, especially at the early stage?
So, an example comes to mind, back in the day when I invested in a company that was creating a robot. And they were making the memory chips and the architecture for that one little task. But as time goes on, the robot hardware can't, it can't scale, and you can't change the hardware once out deployed into the market. And so they needed to think about how are we going to have enough resources, enough compute power, and so on in order to do that. And so they have to think about those things at the earliest onset when they make that design.
Yeah. Now, speaking of challenges, Allison, I studied landscape ecology for my PhD, and honestly, I'll be honest here, I never thought a mapping tool would become, like especially an environmental mapping tool, would become a venture-backed company. Like, I really just didn't think there was any money in it. Now, this was a while ago, but I'm kind of curious how Vibrant Planet came together in that context.
Yeah, so we saw a really big need to modernize how land management and community wildfire risk protection happens. So it's that space, the general space of wildfire risk management, which is what we're squarely in today, but also making sure that nature stays intact in the face of wildfire and climate change, is typically a government endeavor or academic endeavor. And the problem isn't land use as well. Land use is part of the problem that why we're seeing some of these really massive catastrophic fires. So typically, government labs like Forest Service, Rocky Mountain Research Station, and Pacific Southwest and Pacific Northwest Research Station would design plans for land managers, but the problem was the data was not able to downscale accurately. And to actually map nature at a scale where you're dealing with permitted processes requires really, really sophisticated engineering. So we've got an incredible machine learning team grounded in ecological sciences. And that's really what it is going to take to actually map nature. And then our system helps firefighters, fire districts, counties, the Forest Service, Bureau of Land Management, FEMA, design projects at that very hyperlocal scale, that tree or house level scale, to mitigate risk. We help them figure out where do we put our budget to get the most bang for the buck in terms of avoided losses, to build infrastructure, but also natural assets. That's a very, very hard engineering and science problem, and we had to build a very sophisticated system to do that. We were able to get venture backed partly because of our timing. So the infrastructure bill came out, and then the Inflation Reduction Act bill came out. So there are billions and billions of dollars moving to this problem because the world has woken up to the fact that we cannot suppress our way out of the wildfire problem. We actually have to mitigate risk and build resilience around communities and basically restructure, get back to a natural and what will be a climate resilient forest structure in order to keep ecosystems and communities intact. So we had really good timing. We were able to get mission-oriented venture behind us, like Microsoft Climate Innovation Fund, City Impact Fund, Ecosystem Integrity Fund, who saw this really big problem, saw the money moving into the space, and placed a bet on us.
And I mean, you've got the potential, at least, of government money kind of looming off, and I know these things take a while, right, with the government. So how do you bridge the gap to get to that point?
Yeah, so the venture helped us build, to the first question, we were able to build a system for scale. So we've mapped nature at 0.5 meter scale, along with built infrastructure at very fine detail across the western United States. So that enables us to turn on our system for many customers now, diversified across local government, state government. We work with CAL FIRE. We'll be working with other states, Arizona, New Mexico, Idaho as well, Oregon, Washington, all of which have a problem. And then we are also, obviously, all the federal agencies that I mentioned, but we're also growing a lot with utilities. So we work with PG&E here in California. They've been an incredible partner. They're very motivated, as you can imagine, to deal with this wildfire risk problem. We're working with a group of 12 utilities up in the Pacific Northwest. So that's a big area of growth for us. And then we're also starting to look at insurance. Obviously, a lot of people here, how many people here are struggling with insurance here in California? Yeah, so you probably know the news, State Farm, a lot of the other big insurance companies have stopped underwriting in states like California and Washington. And the only way they will actually be able to avoid a collapse of insurance is if they can mitigate or bend the curve on certain risks. And wildfire is one of the climate-driven risks that we can actually bend the curve on. And so they are very interested in us right now. Lots of conversations.
Yeah, I can imagine. So Allison mentioned Microsoft as one of the investors here. Areeb, you spent time inside big tech companies. A lot of them spend time talking about sustainability and climate. I mean, how much of this is greenwashing? How much of it is real?
Yeah, it's a good question. Look, every corporation exists to make money. That is what they're formed to do, and that is how they're driven, especially when they go public. It's really about appeasing stockholders. That doesn't mean you can't do good for the planet on the side, but it isn't your core objective if you're at a big space. So for background, I used to work at formerly known as Facebook, now Meta. And yeah, there was a lot of good work being done there, but you could tell that it wasn't the primary objective. And I can imagine that when things got tough for these companies and people had to tighten their belts, the first initiatives that started to get cuts were probably these secondary initiatives, right? I think this is core to the problem that Allison and I, as well as Hyuk-Jeen, are working to solve is how do you make businesses where the core purpose is sustainability? And that's, I think, what's really different about this kind of new wave of companies and hopefully many of the folks in the audience today.
Yeah, I was going to ask about that. When we last spoke, you kind of discussed a bit of and described your mental gymnastics when you were co-founding your robotic recycling company, Glacier. I mean, this is a bit of a paraphrase here, but you were worried essentially like what would happen if some robber baron PE firm bought the company and just kind of ran it for money. So how do you defend against that kind of thing?
No, I don't defend against it. I actually embrace it. When I was starting my company, I was looking for the right opportunity, and it was really about aligning profitability with impact. That was what I was looking for. I wanted to find a business model where as this business model did better, as we as a company made more money, our impact grew. And so if you can find a place where you can align, for instance, climate impact, a thing that I'm super passionate about, with making money, then I welcome the PE fund to come and take over my business because they will juice us for money. That money directly correlates with climate impact. And there are business models like that out there. There are a lot of opportunities to do stuff like that. In the climate space today, I think finding those, that's exactly what we as society need to do, is start aligning our where we're making money with the impact we want our society to make.
Yeah. Now, I mean, all of this kind of alludes to the fact that eventually there will be exits, but Hyuk-Jeen, we haven't seen a lot of those lately. So what's the, like, how are investors approaching this, given that exits in the space haven't exactly, or really anywhere, been booming?
Yeah, it's a really interesting time right now, especially in the climate space. But right now, a lot of these companies have raised a lot of money during 21-22 timeframe, and they typically raise at a 18, 24-month cash runway. And so now time is coming up for these companies to actually having to go out there and raise more, and they raise at a lofty valuation. And so it's going to be a little bit challenging for these startup companies to raise. So now in the year 2025, as we turn the corner here, and depending on what happens with the elections and all that stuff, I think with the interest rates coming down, this 2025 is going to be the year of M&A and IPOs that we didn't see in the past. A lot of the companies will defer to taking that option of maybe perhaps selling and selling their company if they're not able, excuse me, if they're not able to raise their money, and so there'll be a consolidation, in my opinion, that'll be happening. So right now, the VCs who are able to fund their startup companies for this next duration of the rest of this year, or maybe into the middle of next year, will continue to do so. And for those startup companies who are having a difficulty raising money, we may see some have a bit of a challenge, and so they may have to buckle down a little bit more and try to survive this the storm here.
So do you think you're going to see them conserve cash, or do you think you're going to see a little wave of acquisitions here?
I think both will happen, actually. I think we'll see quite a bit of people trying to conserve their cash over the next 6 to 12 months. And for those that have a unique technology or unique value proposition, I think they will be picked up by some of the larger corporations. Because right now, there are a lot of people with money on the sidelines waiting for the right moment to deploy. And so it's not that there isn't money, it's just waiting on the sidelines. And so the companies by nature that aren't top of the class may dwindle, but the ones that are spectacular with a unique value proposition, I believe, will be picked up.
What are they waiting for here? Are they waiting for the exit signal? Are they waiting for valuations to come down?
Yeah, I mean, I looked at some data back in 2015 or so timeframe. Some of these companies had multiples that say, even though it's elevated on the order of like 10, 11x a multiple, and in the peak of 21, 22, 23 timeframe, it jumped up to over 100x. And then they've now dropped down to earth, on the order of 5 to 10x. And so the valuation they had received a few years back, just massively dropped. And we're not quite sure how the market's going to turn out. And so a lot of these people are saying, well, the market dropped even further, and can we pick them up at a cheaper price? Or, some of the companies that are desperate may reach out for acquirers. And so I think a lot of people are waiting to see that.
Yeah. I mean, Allison and Areeb, we can ask you too, what's the feeling like inside companies at this moment, right? Where you feel, maybe there's this valuation pressure, and you still have some runway, but there's still some question then of what happens after that.
Yeah, it's tricky. I mean, it's a tough fundraising environment. It has been for a long time. I think in our space, two thoughts. One, in our space, I think there are some really motivated investors that at least we've been able to find our people in the VC world that they also, like I said, really want to keep nature and communities intact. So they are very motivated to keep us funded. They know we're the only answer. I know a lot of startups say there isn't competition. Our competition is the status quo inside government, which government cannot build what we've built. So we are the answer, and so we've been able to find a family of venture that really gets it and has maybe a little bit more patience, and they believe, like my leadership team and I do, that we are going to be a very big, significant company, government business for those VCs that get government. Once you're in, you're in. It is very sticky, and that's the same with utilities, and I think it'll be the same with insurance. So though the timelines are longer and it's lumpy, there's no doubt about it in terms of sales, It's somewhat seasonal. We're dealing with that right now, where we got a big lump last year that buried us, and we're about to get another big lump because the federal budget just refreshed, and then CAL FIRE's budget refreshes January 1st. So there's no doubt it's tough, but the investors we've got behind us believe us. And then just one other quick point. I have been personally frustrated watching the AI space, so like ChatGPT and others. There's companies that built foundational models. We have built an incredible foundational model that is literally going to keep half of land on Earth and many, many communities and trillions in assets, as you wrote, when you think about natural assets and built assets, intact. And we can't get a $60 billion valuation like some of these AI companies where, hey, it's fun to make, like my CTO made a very funny picture of a cat holding Viagra. That's super great. But I think what do we value in society is a little bit of a question I have in the VC community, but more generally as well, right? How do we value these things?
Yeah, I mean, Areeb, you guys use machine learning as well. Like, is there a similar sort of sentiment inside Glacier?
Absolutely. I mean, you and me both, Allison. As I watch the AI boom happening, and I think us climate founders, like, guys, remember what matters here. We're trying to save the planet. Can we focus? We don't need another LLM, please. And yeah, I definitely share that. And there's a little bit of frustration, but at the same time, I think there's a lot of opportunity. Can I get a show of hands? Like, who's a founder, budding entrepreneur, has an idea? Do we have a lot of those folks in the crowd? Yeah, quite a bit. Is anyone here, like, are you guys all like pre-Series A seed? Maybe like just have the idea. That's the general. Yeah, okay. So I think it's simple for folks like this. It's like, just go for impact. You find the space that matters. You build a technology that matters and achieves that impact. And Hyuk-Jeen brought up like a lot of important financial mechanisms that matter down the road. But right now, for me internally at Glacier, it's really about make sure you're scaling your impact, make sure that you're achieving what you wanted to do. And so yes, we build AI models that help you, or rather help our machines identify recyclables and trash, and we're developing that, and it's getting better and better. And internally, all my engineering team cares about is like, is my model getting better? Is it moving us towards this ultimate vision we have where recycling actually works? That's where we keep an eye on. And our belief, and I think our investors share the belief, if you just achieve that, you are unlocking tremendous value for the planet, for our society, that will bind perfectly with the exits, with the valuation increase, et cetera. But as a founder, as an employee at a startup like this, it's just about execute towards impact.
If I can just
of course.
a comment. Being the only investor on the stage here in defense of the venture capitalists, we're not all vulture capitalists, and so there's a lot of effort. And if you look at the funding, especially in the climate space sector, the amount of dollars raised in the venture capital world, for the first half of this year was roughly about 3.4 billion globally, and compared to all of last year was 3.9 billion. And so we are on a higher pace to see, and there's still interest in wanting to do good by investing in climate funds and so on. It's not at the peak of what we had in 21, 22. I think it was around 18 billion. That was a little bit crazy, but there is a genuine interest. And when I look at our fund, we invested in companies that are trying to make an impact and do good and be profitable. We actually invested in a company that is in the forest management space to proactively do vegetation management to prevent wildfires. We invested in a green cement company that makes a cement alternative that is 10 times stronger, 5 times more durable, 5 times more fire resistant while reducing carbon emissions by 85%, right? And we have material companies that are making a super polymer that is 6 times stronger than steel, right? But it's recyclable, it's human implantable, and we have a rare earth metal extraction technology company called Phoenix Tailings that is taking rare earth metals out of tailings in order to make high performance magnets in a sustainable way. For the U.S. global supply chain for our U.S. When it comes to electric vehicles, wind turbine, military guidance systems, all of these things require high performance magnets. And right now we're currently relying on countries like China to supply this material for what is so core to our nation from a national security and from an environmental perspective. And so there are a lot of efforts to help all these companies, and we, as a fund, try to seek these things. And so I just want to make that one comment. One other thing I just want to say is, I created, along with my colleagues, we created a deep tech focused VC fund in Boston called VenX. And why we did that is it's a collaborative of VC funds that are housed together, and we literally syndicate deals and look at deals together. And why do we do that? With the implosion of Silicon Valley Bank and all this financial challenges we had for the last few years, a lot of these long duration climate initiatives and things like that, where startups are really trying to change the world, they had a hard time raising capital. And so they're great technology companies, but they're stuck in the wrong economic cycle. And without the support of these banks and venture debt and and so on, a lot of them had a hard time, and some of them would go out of business. And it was something that we just felt like needed an alternative solution. So at VenX, we are discussing, it's not implemented yet, but we're saying, hey, can all these funds come together and back these companies when we know that the company's technology and the company itself is solid, but they're just at the wrong cyclical timing. And that's a very unique value proposition that we have not seen anyone else propose, to have VCs come together to collaborate and do that. Now, we don't want bad actors to do that with every single one of their portfolio companies that are struggling, and so we have to put in some metrics to make sure that that's implemented properly. But these are things that a lot of the VCs who are not venture capitalists, are thinking about. And even the venture capitalists, I think, would come together and work out to help their portfolio companies.
That's the third time I've heard that phrase used before, and
Now, Allison, Hyuk-Jeen mentioned a lot of hardware companies, and in fact, hardware startups receive about 3/4 of all early-stage climate tech funding. Does that seem about right to you? I mean, obviously they're more expensive, but do you think software should be receiving a bit more attention?
Absolutely. Yeah, there's so much potential to manage energy systems, do what we're doing in terms of natural systems and risk management. So I do think that the software space in climate tech has been underfunded, and a little bit of that is, I think, driven by the government policies like the Inflation Reduction Act. There's also the greenhouse gas funds coming out of the EPA, which is billions of dollars that are moving to Elemental Accelerator, which we are both in. And it's very geared for hardware. So with the focus on the transformation of our energy systems and our transportation, we are forgetting a little bit about the software side of managing those systems, but also natural systems especially. We've also seen a big decline. The voluntary carbon market sort of got the knees knocked out of it the last couple of years, and that's primarily a software-focused business as well. So yeah, that side of the climate tech space is definitely struggling a little bit more.
Yeah. Now, I want to remind everyone, we have mics here, so we can take questions. So if you have any, feel free to queue up behind the mics. We'll get to as many of them as we can. In the meantime, though, any of you can answer this, please do. With many of these companies, saving the world means scaling quickly, right? If we want to hit net zero, we only have 25 years or so to get there. Which is not that many venture fund cycles, and especially with hardware companies where it takes a long time to develop, test, validate, all of this stuff. Do you think they can move fast enough? And maybe Areeb, we can start with you.
Fast enough is an interesting question, because we have certain net zero goals we're trying to get to, and so I'm not going to speak to can we move fast enough, but we definitely can move faster than what we're doing right now, and there's definitely a lot of opportunity to continue to pour investment and energy into these problems, into this space. Hitting those goals, I mean, it depends company to company, right? For us over at Glacier, it seems very feasible that we can achieve what we need to do, which is when you throw your plastic water bottles away, they actually get recycled. We can achieve that before our oceans are completely filled with plastic. That is an achievable objective, and we can actually look at the timelines there and it makes very much sense. But there are other, I mean, I won't speak for what Allison's doing or any of the other companies that Hyuk-Jeen mentioned. I think it depends. The reality, though, that I'll kind of just highlight is we should be moving faster than we are now, and this goes back to kind of just wanting everyone to just really pay attention to climate change the way that we were really hype on it 4 or 5 years ago in this space. I just want that to continue.
Yeah.
Yeah, and I'll just add, I think where we as a society are stuck a little bit is how policy and the startup tech community come together, and there's a lag there. The Inflation Reduction Act is obviously unprecedented, it's incredible, but there's still an unbelievable amount of red tape to cut through in order to put that money to work through R&D grant programs or getting deployments done with government, whether it's a company like ours helping to keep nature and communities intact, or energy infrastructure. So I think generally we don't quite have the perfect models yet on either the funder side or the company side to actually deal with the climate problem fast enough and at a big enough scale. The models often break, right? Like investor and shareholder expectations are often not aligned with how hard and intractable the problems are that we face as a society. So yeah, it's I think in some ways we're a little bit stuck, but then there's this huge potential, the topic of this conversation, to have companies like ours that really can make a lot of money and do good at the core of why they were founded. But like you said, not everyone's going to make it, and it's really too bad because we need it's all hands on deck time. So
I think there are kind of several key players here, right? Just mentioned regarding regulation, right? I think it's going to play a key role, and that's where this election, all of that's going to make a big difference in how we move forward. But in addition to that, if you look at some of the other players, which is the corporates and the startups and the consumers, there has to be a level of education of the urgency of what's going on. On the corporate side and the startup side, and I think it's relevant to this community here, is that the startups, as I mentioned, have to learn to make their platform, make their product scalable quickly so that the corporates who are slow moving, right, can easily adopt your technology, right? And that's a key problem that I've seen happen over and over again. When I was the head of Samsung Ventures for the East Coast office, and I had all these companies come and approach me, and they're making this one little AI model or one little widget. And I said, okay, can you do that across the AI model across 150 different languages, across 120 different countries, in 50 different verticals, right? And do it on a scale where you can add a new vertical every day. And they're like, oh, we never thought about that, right? So a lot of the blame goes to the corporates, but at the same time, the startups themselves have to make it so that they can actually iterate much quickly and assist the corporates to do that, and that's a big challenge. And so I think we can all play a unique role to make this whole thing accelerate a little bit faster.
Yeah. I think that's a great point. I do think, there's many players involved. You got your startups, your investors, the corporates, the government. I think if we all work together, it is the reason I think we all got into this space is because we do believe we can get to where we need to get by the time it's too late, but it is going to take really good collaboration across the whole stack.
Yeah.
Yep.
We've got a question over here.
Hi, thanks. My name is Tarantan. I'm coming a little bit from the hardware angle. So I lead a company called Pacini Yachts that's looking to decarbonize marine and boating at mass. I think it's relevant still for software. So this is kind of for the whole panel. As funds and companies that have to balance both profit and purpose at the same time, can you speak towards how you manage stakeholders effectively? Because I think the deeper question for this is that how do you deliver profit, and when do you deliver profit? When do you deliver purpose? And is that compliant to the timelines of the investors you bring on board? Because ultimately you want to scale for impact, but a business does need to be profitable to be sustainable into the future.
Yeah, a company that comes to mind that we're looking at, I think is doing a wonderful job. I think for startup companies, your mission is steady Eddie, right? And you stay with that course. And the business models can change in order for you to become profitable and make money. And but as it gains traction, I think the business model and the opportunity to make money will continue to grow. One company that comes to mind we're looking at is a company that's helping women with breast cancer screening, but it's trying to augment mammograms that are not widely available in remote areas around the country and even in the world, but using a mobile phone. Imagine being able to do breast cancer screening, with a mobile phone in the privacy of your home or at a clinic, right, for fractions of the price of an MRI or a mammogram or ultrasound. And so their mission is to help all women with this and democratize. And because the pricing and this unique technology allows them to go at such a low price, this company, Linda LifeTech, is able to help women do the breast cancer on a more regular basis and generate revenue because the volume that they're able to create is much more. And so even though it's a hardware and software company, the price point is so much lower, right? And we see that happen all the time. And normally when I tell startup companies, when you're building a startup company, the value proposition you're providing has to be 10x faster, cheaper, or better than the existing incumbent technology or solution. Without that, people don't have the incentive to adopt your solution. And so when you first start your company, you have to be able to demonstrate that, right? I tell people all the time, when Apple first came out with the iPod, allowing you to store 10,000 songs on your iPad versus a traditional MP3 player was a massive, orders of magnitude more. That got people interested. When Gmail came out and gave out, I think it's like a gigabyte of memory versus 100 megabytes, that order of magnitude caused people to change. But if I went from 1 gigabyte of memory now of Gmail to, I don't know, Hyuk-Jeen Mail at 2 gigabytes, would people change? The friction is too high for you to move. And so that's really, really important. And so have the mission, but have the value proposition be at least 10x, and then people will move and there'll be a business model around it.
And I can add, we founded as a public benefit corporation, which is there's B Corps, which is a consumer certification that we see on lots of packaging and stuff. We will do that at some point. It's a lot of work. But we founded as the legal definition of a public benefit corporation. And so by nature, our company, and I was not afraid to do that because like your company, it sounds like, we do good with the core mission. It's all one thing. We make money and we do well by doing good. So as a public benefit corporation, you are required to report to your shareholders triple bottom line reporting. And so we do that on an annual cadence where we are reporting our numbers alongside the impact we're having socially and environmentally. So that was that's an elegant structure to consider if you haven't already, and it's easy to convert. And it's sort of a good forcing function to do the reporting side of that, to really think through every year, what impact are we having and how do we account for it?
I'll just throw a quick word in, because I think in my experience around the company, I've experienced this exact trade-off of could we make more money at the cost of less impact? And I view it as kind of this, XY graph, or here's your impact, here's your money, and ideally you're up here in the top right, but oftentimes you have these incentives. How do you make that choice? It's going to come down to you as a founder and what you want to achieve. Let's say you can take a different direction, achieve 50% less impact at 30% more margin. Is that worth it? Is that the company you want to build? My suspicion is that because you're here, because you're asking this question, it's not. You're really into the impact. And the objective is, in these early stages, move around, figure out what the perfect kind of alignment is between impact and profit. It exists. It's going to take creativity. It's going to take testing. When you find it, hopefully, you won't have to make this decision.
Yeah, I guess it's about finding your tribe. In that
Exactly.
sense.
Very much so.
Same way you do, yeah.
Cool.
Thank you.
Thank you.
Another one over here.
Hi, my name is Saeed. So I'm a lawyer. I'm a little biased for some of the question, but I think you all raised great points. But as you mentioned, like especially in impact investing or like just companies that are in the climate space, there's that tension that they need to still deliver. And like some of my clients are impact investment funds, and I haven't seen any impact investment fund like withdrawing any funds like if they don't see the impact or the benefit. Like it's very much still focused on the profit because they are responsible to their own LPs at the end of the day. And especially with all those like dates that people are throwing around, 2030, 2040, 2050, like just the world is gonna end. Like I'm curious, like your perspective about like, because we are just focusing on the carrot, if stick would be more impactful or like efficient for at least these funds that are really focused on climate, like climate startups or like climate funds and so on. And the reason why I'm saying it, at the end of the day, like we are assuming that the market is always going to regulate itself. But as you also mentioned, like in 2021, when there's a hype, like there's a lot of funding, but then like I don't know the numbers for other like industries, but I don't think they're as impacted as like, from 18 billion to 3 billion. So, the market is going to prioritize its own benefits. Like it's difficult to like force them. And then the market is mostly driven also like by the capital, like by the investors and so on. So,
Hyuk-Jeen, did you have a comment?
I couldn't quite hear what
Yeah,
you're saying.
what was the question?
the question is like, do you see any risks using more regulation or more stick, like just more threat?
Or sticks. Okay, yeah,
Or,
the carrots
like,
versus
just-
sticks in terms of
Exactly,
investments.
because we are always
startups.
focus on profit and the impact is going to come, but it very much depends on the founder and their consciousness, and you can't check that.
So is it better to use carrots or sticks in order to
Yeah, like, I guess
regulate
what
the
role
venture
would-
At least
industry?
for these special circumstances of like climate funds or like just the things that are really like going to impact us, our daily lives, even if the
Yeah, I think
monetary refund.
Yeah, I think it's I don't know if this is quite a question for the stage. It's a question of regulation, right? And how much say do investors and startups have over that?
I mean, startups, there are, influencers within the startup community and also in the venture community who work closely with the regulators to try to, to modify and advise, on certain matters like this. I don't know if it's necessarily a carrot or a stick issue. I think you need a bit of both, right? That sometimes you do have to penalize people for causing destruction on Earth or causing destruction on our human bodies or causing whatever it might be, right, for education and all of that. But at the same time, there has to be an incentive for people wanting to do what they're doing. Especially the corporates, they are highly incentivized to act in a certain way based on the tax regulations, based on certain, certain incentives. And so I think there's a mix of all of that. And the VCs are there to support these companies and taking advantage of those things to help these companies grow and truly make an impact. So I'm not sure if I answered your question fully, but I think it is a mix of both.
I can add one thing, which it's less relevant for the VC kind of funding world, I think, but we have seen a couple of attempts at government regulation. So we've got the new SEC rules that require companies, publicly traded companies, to manage climate risk. They're all kind of scrambling to figure that out. Europe just enacted the CSRD. I'm not going to remember what that stands for, but it's going into law in 2025. Very similar, where companies have to manage climate risk, report on how they're managing for it, and they have to also report on their impact on nature, things like biodiversity, water, and carbon. So that's going into law in 2025, and so global companies like Microsoft and others, many others, are trying to figure out how do we report on this, and we might as well report on it globally. We saw ESG take hold. That has sort of been taken down, in large part, in my opinion, by conservatives who don't want that kind of reporting. So we're trying to figure out, we as a collective, how do we make sure that these next frameworks for climate resilience, the task on nature disclosures is another one. How do we make sure that these beyond shareholder value metrics actually come to fruition? Because we as a society, again, we have to start measuring more than shareholder value.
So unfortunately, we're almost out of time. I want to just ask the panelists one very quick question, one two-word answer. Which technology or sector do you think is going to spark the next big wave of climate tech investment? We can start
Say
with
the
you.
first part again.
So which technology or sector you think is going to spark the next wave of investment?
I think, like we talked about earlier, there's been a lot of investment in energy infrastructure, and there has not been enough investment in managing nature. So we have to do two things at once as we face climate change. One is we have to stop using fossil fuels as much as humanly possible, and we need to speed up much faster than we have been doing. And like we've talked about here, the public and private sector have to come together to accelerate that, and the Inflation Reduction Act is a very big step towards that. The second problem with nature is when we release carbon and methane, carbon sits in the atmosphere for 100 years. And so we're living with climate change starting with the Industrial Revolution, essentially, that is sitting up in the atmosphere. We have to figure out how to pull that carbon down. And part of why I started a nature tech company, and one that can avoid these massive emissions from wildfires. I mean, Canada, the Canadian fires last year, they were the 5th largest carbon emitter with a very tiny population, solely because of the wildfire. The California wildfires every year, undo all the progress we make here in California on climate change. So I believe we need a lot more investment, and I think it'll be catalytic to many things, to keeping that $1 trillion of assets in both built infrastructure and nature intact.
Yeah.
I mean, most of the economy is rooted in nature. We forget that.
Yeah.
So,
Hyuk-Jeen, Areeb, maybe we can do a rapid fire quick round. Do you have a...
Yeah.
Yeah. I think it's not just a specific technology, but it'll be driven by other needs that are really, really hot right now. For instance, the need for AI, right, in the data centers will require tremendous amount of energy, and so for that reason, these alternative renewable energies sources will be there'll be a boom in that space to back that. Not because people may necessarily be interested in renewables, but they really want that AI, they really want that data center, and so that's really important. Two, I think aside from technology is being developed all around the world. I think it'll be more dispersed. And so you see technologies, similar technologies that are in the United States that are being done in other countries at a lower price, gives a greater value proposition. For instance, Material Evolution created green cement they raised a total of $20 million, versus Sublime Systems, which another company here in Massachusetts, they raised close to $200 million over the lifetime, I think. And so you see that 10x difference because this company is based elsewhere.
Mm-hmm. Yeah, and Areeb, any sector you're keeping an eye on?
I mean, AI.
Yeah.
The good news. AI as a technology is a boost in terms of technological development, and the same technology that underlies the advance in LLMs we've seen is advancing AI in a number of ways, and that AI is going to give us better information, better predictive abilities, better insights into where we're going, and hopefully better knowledge for how to actually address these climate change problems.
Excellent. Yeah, well, a little bit of hope for the future. Thank you all for joining us. And if you have any questions, we will be floating around today, so please ask us. Thanks again.